Hello everyone, thank you once again for joining us for this inaugural event and for being a part of this laudable event. My name is Femi and I'm a life and living benefits advisor with RBC Insurance. I used to be an investment banker back home, and my passion for insurance came about due to various life experiences I've seen. I've seen more average families, Nigerian families that come to Canada due to either loss of a breadwinner or loss of income. I've seen the families disintegrate financially, which all this can be prevented. We know back home from Nigeria where we come from, 80% of the time the police normally chase people to get auto insurance. Talk less of talking about life insurance or protecting your income or planning for the future. I also understand that a lot of us educated people in Canada here, we understand insurance, but the truth is, how much do we know about insurance? We all have coverages through our work. Are you going to be at your place of employment forever? If you leave, are you going to be able to take the insurance with you? So those are the things we would like to demystify for you today. So join me in welcoming Ayatollah, who is a senior sales executive with RBC Insurance, to help us in demystifying insurance for us. Thank you.
Thank you, Femi. Is everyone able to hear me okay? Yeah? Okay. So I don't like to stand behind a podium. I like to just kind of walk around, kind of hover, okay? So my name is Ayatollah Mishtaba. I'm a senior sales consultant for RBC Insurance. So I assist Femi and Raymond Brown. So I've been with RBC roughly about 7 years, going on 8 now. Mainly, I started in insurance in 2010 for a company called Pencorp. Sort of progressed in my career, and I was able to move over to RBC Insurance. And now I'm here. So I'm happy to be invited to this event and have the ability to speak to all of you today. So thank you everyone for coming. The room is filling up now, which is good. Okay, so today I'm going to be discussing some little tips about insurance. And I would encourage all of you to kind of chime in with answers and you know, be involved in the presentation a little bit. And by the way, I have 3 Tim's cards here, so that's a little incentive for whoever wants to participate. Okay? So if you answer a question, you get a Tim's card. Don't worry, they're not like $2, they're like $5. So you may be able to get a coffee and a bagel, maybe, but you may need to take some change with you though. Okay, so protecting your most important asset. When we talk about assets, right, we think of perhaps our car, maybe our home, our children. I mean, I hope you think of your children as an asset. I would think most of you do, okay? But a very important asset that we have is our ability to earn income. Okay, so our ability to go to work on a day-to-day basis to be able to earn income for ourselves and our family, because that's what really helps us pay our bills. So in this presentation today, okay, so Femi introduced me, and I'll talk a little bit about how you can protect your assets and what type of government programs are available to you, what type of programs RBC offers to be able to help you protect your income. This is mainly educational to help you kind of understand how the system works here, and then what steps you can take to help ensure your income as best as possible. Okay. So as it shows here, you're your most important asset. The younger you are, the more income potential you have from now till you retire. So let's say you were 30 years old. Assuming you were earning anywhere between $60,000 and $80,000 a year, you would be able to earn roughly $5.4 million through your entire career, assuming 35 years roughly, assuming a 5% annual increase on your wages as well. However, if one is to get disabled in that time, that could derail your entire plan and your family's plan. So the idea here is that you implement some sort of risk mitigation tool to be able to bridge that gap. So if you were able to earn, and then all of a sudden that ability stopped, you would still be able to maintain your lifestyle and be able to maintain your family's lifestyle. Okay, and as we can see, as you get older, the income potential reduces. So therefore, it's more important to be able to set yourself up when you're younger to be able to protect your income. So the normal thought about disability, and when I say disability, I don't want to limit it to just someone in a wheelchair, or someone broke their arm, or their leg, or something like that. Disability also ranges, and here in Canada specifically, it's very prevalent, where people are normally mentally disabled from stress, from burnout, from all sorts of mental extremities, not just physical. Okay, so that also counts as disabilities as well. And here it's very, very, very prevalent, where many people are taking time off of work because of stress-related issues, and that's affecting their work life and as well as their personal lives as well. Okay, so the most common theme is it won't happen to me, right? That sort of stuff happens to someone else. That's not something I really need to worry about. Okay, and the reality is it happens to everyone. I'm sure everyone in this room probably knows someone who is maybe off work or has had to take time off work, maybe because of an injury or an illness. And that's really the whole theme of today, right? Just to really help you understand that really all of us really know someone that's been affected by it, right? So if we're in that situation, it's best to make sure that you're well protected, to make sure that what you want for your family still continues. Okay. So risk and duration of disability. So a 35-year-old has roughly a 50% chance of being disabled prior to the age of 65. And the amount of time that they will be on disability roughly ranges between 90 days or longer as well. So it's important to note that if someone is to be disabled, again, this doesn't have to be from an injury or an illness. This could be also from mental, okay? The duration can average between 2 to 2.8 years, roughly. So for your knowledge, it's important to note that, okay, so how am I preparing myself if a situation were to happen to me, my spouse, what would we do income-wise, right? So I always sort of put myself in that sort of position, right? So I'm in a situation where I'm not married, so my income is extremely important to me. I have a mortgage to pay, I have a house to pay for, my car, a whole bunch of other expenses, hobbies, I like to travel. So I have a lifestyle that I live, that I'd like to maintain. And I think of my personal situation, the only thing that would derail me is really a disability, right? So I insure my income to make sure that, if anything's to happen, I'm at least protected, I'm able to earn an income on an ongoing basis. So how can I protect my income? So a very common one is equity from your home. Okay, so for all those who are homeowners in here, you may say, well, you know what, if I get disabled, I'll just take a home equity loan, and then I'll use whatever amounts I'm able to get, and then I'll live off that money for some period of time, or I'll remortgage my home. That's one common, I guess, method that you can take. Okay. Who would like to give me another common method that you can take if you're disabled? What can you do if you have no sort of protection in place?
You can sell off investment.
Sell off investments? Okay. I wasn't joking about the Tim's cards. I have 2 more left. Everyone, 2 hands up now. Yes.
Borrow from friends or family?
Yes. So those are all valid, right? So CPP, disability benefit, and which we will talk about that. Loan from a bank or private lenders. So you can take out a line of credit maybe. and then use that. You can, go to a private lender, go to some family members. That's usually the most common thing. Okay, borrow from friends and family. Government options and employment benefits. So some of your employers may offer some long-term disability benefits. Some don't. So it's important to know if your employer does or if they don't, because that could be a determining factor. In a situation where you fall under disability, and then now you're kind of unsure if your employer offers anything, right? So it's important to review that. Call your HR department and see if they have any sort of plans in place for you. Okay, and then the last option is individual protection. So essentially, you're basically saying, instead of relying on all those other options, I'd rather take care of it myself. So, that way I don't have to go and knock on my family member's door, to ask for money when I need it at a desperate time. Okay, government options. Who can tell me some of the government options that are available? So you mentioned one, CPP. Yeah?
WSIB.
WSIB, okay. Who knows what WSIB stands for? Yes, that is correct. What is another option?
Yeah.
EI, yes, that is correct. Wow, you guys are very sharp. Okay, good. So benefits. So first we'll start with EI. So EI is employment insurance. We all pay into it here. Okay. The one that most people are very, I guess, familiar with is unemployment insurance, where it's paid to you when you're laid off, or basically a situation like that. Now EI specifically is meant for individuals who are disabled. It pays you for up to 15 weeks, and it can pay you for roughly, well, it won't even get to 51.7. If you're able to make that much, the max it'll pay you is about $543 a week, okay, for up to 15 weeks. So that's the maximum it'll pay, and then it ends. So that's one option, that's one government option. However, in order to qualify for the government option, you have to apply, and that can be a cumbersome process because it can take some time. So if you are still disabled after that 15 weeks, then perhaps it'll start. But the question you have to ask yourself is, can I wait that entire time to apply for a government program, have them come back to me, and then go through that whole process? Okay. CPP, so Canada Protection Plan. We all pay into it in here as well. So Canada Protection Plan has a different definition of disability. So we all know it as kind of a retirement kind of safety net, right? So it's mainly intended for retirement purposes. In retirement, you would receive a certain amount per month. However, it's also used as a disability plan as well. However, the definition of disability is severe and prolonged, which means you basically have to be in a situation where you can't do anything in order for the government to pay. Okay? But if you sprain your ankle or something and you can't go into work, they won't pay. Okay? Or if you have a headache and you can't go into work, they won't pay. Or if you're stressed out. Yes. Or if you're stressed out, they won't pay. Okay? All right. Okay, so that's EI, CPP. And just to note that they are all taxable. Okay, so even though they're government plans, they are going to be taxable just like regular income. Okay, so we spoke a little bit about, someone mentioned WSIB. So WSIB does not apply to every single worker that works out there. Okay, it mainly applies to certain industries. Generally, professionals do not have WSIB. Okay, it is usually meant for individuals who are working in physical jobs. So WSIB pays up to 85% of their take-home pay, so your net pay. However, it's extremely difficult to claim through WSIB, and it's only injury while on the job, injury or illness while you're on the job. Okay. And 70% of disabilities happen outside of work, so that's important to note. Short-term disability, covers your income for up to 120 days, and it's 100% of your income that it covers. Long-term disability covers you generally 60 to 70% of your income, and that is usually fully taxable as income as well. So take an example of someone earning $100,000 a year. Long-term disability would pay them maybe 60 or 70, and then that would be taxable. So their net income would be around 50,000 or 45,000. Right? So a question that you would ask yourself in that situation is, would that be enough for you to still maintain your lifestyle if it was cut in half? Okay. So an example, let's say with an RBC employee. Okay. So our benefits are pretty straightforward. 28,000 is what everyone gets, regardless if you're the CEO or a bank teller. Okay. Which amounts to about $23.33 per month, which is roughly 70% of your earnings, whichever is higher. Okay. So you'll reach the maximum benefit if you earn greater than 40,000. So generally, long-term disability plans generally put a cap on how much you're able to get through the work disability plan. So it's important to really review your group benefits booklet if you have one at work. Find out how much you're actually getting from your employer, and then from there, review it further to see if that's actually enough for you. Okay. So a real-life example. Okay. We have Kofi is an IT technician, and his wife Adjoa is a pharmacist assistant making $45,000 per year. Those names are a little bit different at first. Actually, no.
It's supposed to be Esther and something else, right? So it's okay.
It was supposed to be Emmanuel and Esther, because I told him that Kofi and Adjoa are actually Ghanaian names. So we were trying to make it more Nigerian. So yeah. Okay. So they have fixed expenses of $7,300 per month. Unfortunately, Kofi experienced a mental health issue, and now he is unable to work. So group benefits paid Kofi 67% of his income, of $40,000 because of his group benefits that he has at work. That's the maximum coverage he's able to get. This means Kofi will receive $23.33, so $2,333 from his group benefits per month, and this amount is taxable. So his take-home pay will be $1,600 per month. Now, Kofi and Adjoa have a total income of $4,433. So $1,600 from Kofi, and then $2,833 from Adjoa. But now they have a gap of $2,867 per month to cover their fixed expenses. Okay? So the question here is, what would they do in this situation? Right? So he has group benefits at work. However, he doesn't have enough. Now, disabilities is no respecter of your situation, right? So it just happens. So you have to find some sort of way of how you're going to protect yourself against a situation like that. Okay? Okay. So luckily, Kofi purchased an individual plan for $120 per month, and now this plan will pay him $4,000, up to $4,000 tax-free per month to cover his full expenses. So by basically topping up his group plan, he was able to have enough to take care of his expenses and basically cover his pre-disability income. Okay. So it's really a choice. Okay. I'd like to show you two examples here, and I'd like to hear your participation in terms of which one you would prefer. Okay. So job A pays you $60,000 per year, and disability strikes, you get 0. Okay? Or job B pays you $58,000 per year, disability strikes, you get $39,000 tax-free. Which one would you prefer, job A or B? Oh wow, very, very conflicted room.
For A,
Yeah, for A. Put your hands up for A. Wow, no one has their hands up. I heard at least like 5 A's before, and then now everyone's just like. Okay, for B. Okay. Some are undecided. Yeah, exactly. Or it won't happen to me, right? Yeah. So why would you choose job B?
Because the 2,000 is so much now. If job B was paying 28,000 per year, I probably might have thought of the other way, but 2,000 is it.
Okay. So $2,000 is not really something to really
It's not material.
fight over. So you would rather have that protection rather than have zero, right? Okay. So put that in perspective in a real life situation. Okay. So let's say you're in the situation right now with job A, and job A is giving you nothing if disability strikes. But let's say for, I don't know, $100 a month, you were able to cover at least 80% of that. Would you do it?
Yeah.
Okay, good. All right. So what's the right solution? So the first step is really to sit down with a licensed insurance advisor like Femi, okay? And then he'll be able to help you kind of discuss what your options are. But I would first say, look at what you have at work currently. Go through your group benefits plan if you have one, or speak to your HR professionals if you have one at work. Speak to them and see what type of benefits that they offer you. Secondly, if you already have some sort of plan in place, sit down with Femi and then review that, right? See if it's enough for you. Because like I showed you with job A and job B, that marginal difference can make the difference in you being able to afford your lifestyle. Okay? Okay, so with that being said, I'm going to introduce Raymond Brown. Hello? Can you hear me? Yeah? Okay, great.
Well, first off, good afternoon, everybody. My name is Raymond Brown. I'm actually the Regional Director for RBC Insurance for Brampton. And I've been with RBC for over 11 years, actually going on 12 years now. And through all those years, I've helped thousands of clients protect what matters most to them, such as their income and their assets. And today, we had an opportunity to hear from Aya on how to protect your income. Now, with a show of hands, how many people would want to do business with RBC Insurance? Okay, so nobody yet. Okay, how about this? How about this? I'm gonna give you 3 reasons of why you should do business with RBC. Okay? Oh, there's one in the back. Thank you. But let me give you 3 reasons. Okay? The first is strength. The second is value, and the third is advice. Okay? So let's talk about the first reason, which is strength. When it comes to lifelong commitments, strength and stability are our clients' 2 major concerns. RBC Insurance is actually part of RBC Bank, Canada's largest and most profitable bank. And also, RBC actually is part of North America's leading diversified financial service companies, servicing over 16 million clients in tons of countries across the world. Okay? The other thing is that in 2017, as you can see on the board here, RBC had a net profit of about $11.4 billion. That's up 10% since 2016. And we also had over 17% return on equity last year. Okay? Now, the other thing is that RBC actually was ranked number 1 among all banks for client satisfaction last year in 2017. And what's more is that RBC was actually in the top 100 employers and in all of Canada. And what this meant is basically we did this by creating high-performing, collaborative, and inclusive workplaces to ensure that all employees were taken care of. So this is one of the first reasons, which is strength. Now let's talk a little bit also about, RBC Insurance. RBC Insurance is actually the fastest growing insurance company in all of Canada. We have over 2,500 employees, and we service over 4 million clients globally. In 2017, RBC actually had a good profit of $726 million in net profit. which is really great to see there. And we had a return on equity of about 48%. Now, there's also a company here, it's called AM Invest. I'm not too sure if you're familiar with it, but they look at the financial strength rating of every company. And they named RBC A+. So it's important that your company is there for you when you need them the most. And we paid out over $400 million in claims last year. That's about $1 million a day. So that's a strength to know that if I need to make a claim, that RBC is there to take care of you. Okay? The second reason really lies around value, right? And I think everybody would agree that value lies with choice. RBC offers a wide range of products such as home, auto, life, travel, disability, critical illness, wealth solutions to group, individuals, and clients. And the good thing is you can get this online, you can get it through over the phone, you can get it through one of our 52 insurance stores across Canada. And the good thing is that Femi is an individual that you can meet with at the branch, or he can meet you at your business or at your home, right? So he can provide you with the solutions when you need it the most, which is the second reason, which is value. Now, the third reason is advice. How many people, after hearing Aya's presentation today, is insurance complex and confusing a bit? No? So when you open up your home insurance policy, you can understand everything about it? I can come and meet with you and you can tell me everything about it? So would you guys agree? Let's be honest. Insurance is very complex and confusing. Would you agree? Yeah. Okay. All right. So it's important to get advice from an expert. RBC Insurance makes sure that people are extensively trained and licensed to provide you the right advice before you make a buying decision. This advice then fits your needs and avoids any confusion in the event that you have to make a claim. This is very important because what this does, it gives you peace of mind knowing that you're protected properly. So those are the three things. It's strength, value, and advice. Those are three key reasons to deal with RBC Insurance. Okay? So we have anybody else has any hands up that want to deal with us? A few, okay. All right, well, you know what? I want to thank you guys for allowing us to present today. And what we're going to do is we're going to open it up to see if you guys have any questions in regards to Aya's presentation. So we didn't have a chance to ask any questions. Any questions for Aya?
Happened to me. Indeed, nobody wants it to be him. But my question is to overcome that kind of apathy. Do you guys have any product that someone can cash out of after a certain period of time? Say you've been paying insurance for 20, 25, 30 years and nothing has happened. Are you going to lose all that money to insurance when you really know you are praying to be healthy, you are working out? It's not funny, it's not a laughing matter, it's serious. Do you have a product that one will contribute towards 30 years down the line, nothing has happened to you, you and your wife are healthy, and say, it's retirement time now, I want to gallivant around the globe, I want to cash out. Thank you.
So I'm not sure if you can hear me back there, but yes, we do. Yes, we do. We have different options through Universal Life that we can help you with that.
Okay, we can only take one more question.
One more question? Yeah. Okay.
Anybody? One last question.
Brief question. Most of your presentation, or what you said during your presentation, is for those who are employed. You haven't talked about those who are self-employed.
Yes. Yeah, so it would fall in the same category as well. We actually have specialized solutions for self-employed individuals. Yeah, so if you'd like to sit down with one of us after, perhaps we can take it offline and certainly discuss that. Yeah, but employed, self-employed, we deal with everyone in that umbrella.
Yeah, usually self-employed people won't have EI benefits, CPP, or WSIB. They really just are just fending for themselves, right? So they're very important to protect their income. They should have an individual policy, and also looking at their business and their fixed expenses for their business and how we can maintain that. Because yes, we're giving you income for your household, but now what about your fixed expenses for your business? So we look at both, right? So for business owners, but this was more specific around the individual. But that's a good question. So I guess that's the last question here, so we're going to wrap it up. So thank you. Actually, one more thing. On your tables is actually a thank you fill-out ballot. If you complete this ballot for us today, you have the opportunity to win this, which is a $100 gas card. We can all appreciate gas. right? So we're going to do a draw at the very end for one winner. So I encourage you to fill out the ballot, and we're going to do a draw at the very end to complete this, okay? So once again, I want to thank everyone for allowing us to speak today, and you guys have a wonderful rest of the afternoon, all right?
Thank you very much, Raymond.